हम यहाँ पे थे मेरा ख्याल है न्यू कार सेल्स पे
जी सर।
आई बिलीव हाँ जी ओके सो नाउ new car sales car manufacturers I believe that all of you can see it otherwise I can increase the I can zoom it out right so new car manufacturers sell their cars to franchised car dealerships who then resell those cars to customers right car manufacturers benefit okay from this information it looks like that they have sold car to you and now you are selling it to the customer. So it doesn't look like that there is an arrangement where the manufacturer is just displaying their car on your showroom and the transaction would be recorded only once the car is sold, right? Or the terms of sale are met, right? So car manufacturers benefit from this arrangement because they can focus on the design and manufacture of their cars. For that reason, they are often referred to as original equipment manufacturer in the car trade. So, what actually they are trying to tell us that car manufacturers would be outsourcing this sales activity to a third party, which are their dealerships, and they would be focusing on their core business. Franchised are granted to dealerships that can meet the strict criteria set out by the car manufacturer, which include suitable premises for displaying car experience and competent. Now, this critical, these are the critical things. Display premises for displaying car, so it needs a appropriate infrastructure, building, space, experience, competent staff. The staff is very important because your whole business is about creating a positive experience for the customer, which you will be doing through your human resources. So that's the value creation system. Now they have structured whole of their organization around that business model, right? So that's why they are investing a lot on their people, their human resources, in their training, their sales training, their product training. Product training is familiarization with that product. Sales training is that the techniques to convince the customer or to persuade the customer to buy your product and services. Properly equipped and staffed workshop. Car manufacturer monitor the performance of established franchise dealership. So your performance is also being monitored, and the dealership is being paid on your uh, performance. Like you are meeting the criteria, performance criteria. Now, what is that performance? Customers are asked to complete questionnaire or participate in telephone pool um, about their experience of buying a car or as time passes of having their car serviced and repaired by their dealership. So now you know that your performance is being evaluated by the manufacturer and your remuneration is linked with the satisfactory performance. The poor performance can be costly. Dealership receive bonuses, often referred to as sales incentive for achieving target for sales and customer satisfaction. Now you could see that defining value. What is the what how the Cuppcar is defining the value? Selling the cars and positive customer experience. Now you could relate it. That's why I wanted to tell you, that that's the one thing I told you, and now you could explicitly understand it. But you need to keep your mind open that there would be the other things which would be related to each other, right? Failure to meet those targets can result in a reduced bonus. And if performance is consistently poor, then dealerships can be stripped of their franchises. So your company would be there, like the dealership is there. You have registered your company as a dealership, car dealership, with the whatever the agency. Now you take the franchises. So that's the business model. I'm just clearing it, so you should be very clear that these are the same thing. Like uh, then cars are sold to the dealership, so all the risk and reward is transferred. As I told you already, we discussed it briefly about the consignment inventory. So if you would be taking it as a consignment inventory, then the risk and reward is still with the manufacturer unless it is sold. there could be change in the arrangement between manufacturer and dealership. Consignment inventory, I have explained to you. We will see that in the next slide. Human resource holds the most important position in the business model because this is all about customer relationship, creating the positive experience for the customer who are buying the car, who are coming for the service, who are coming for the maintenance work, who are coming for the body repair work, etc., etc. Right? Then franchises grant a degree of exclusivity for both dealerships and manufacturers. Now the relationship gives the some the exclusivity to both parties in that franchised agreement. A car manufacturer restrict the number of franchises within any given geographical area so that each dealership has its own sales territory, which is called the encatchment area. You know, so there is a understanding that if you would be doing it, then the customers in that area would most probably be your customers. So that otherwise, if you would be giving a lot of dealerships in a one locality, then they won't be able to meet their cost and the business model will not be sustainable. So you know that the people might be asking for terminate their dealerships. Okay, so it's don't territory. In return, the franchise dealership restricts sales of new cars to that brand, right? A car sales uh, a car sales business a car sales business can have multiple a car sales business can have new car dealerships selling different brand in the same area. So you know that being a cup car, you could have the dealership of the different, but at a one dealership, you would be selling only the cars of a one manufacturer. Possibly even a even adjacent to one another, they cannot sell multiple brand of a new car from the same dealership, right? So you could have the two dealerships just beside each other of the different manufacturers, but you can't have the two dealership of the same manufacturer, car manufacturer at a one place. Car manufacturer decide on the quantities and the models of the new cars that will be delivered to each dealership. Now there's a limitation on you. There is a one popular car brand of a manufacturer, and you want to get the more inventory of it compared to the slow moving model of that car of that manufacturer. But you know that the manufacturers are keeping it to they are keeping a control over it because they want all of their model to be sold. So deliveries effectively constitute sales made on normal trade credit terms. Car manufacturers do not necessarily permit the dealers to specify large allocation of more popular model or fewer of a less popular model car models. Car manufacturers are keen to ensure that the customers can see their entire range of model whenever they visit their local dealership. Now, you know that they would be giving you that they are keeping a control over it because they want all of their models to be sold. So technique for the performance evaluation needs to be revised. Uh,
जी सर
revised means that you need to revise that topic. Sorry, please. You were saying something. Somebody was
जी
saying.
मैं कह रहा था इसमें अभी जो इन्होंने कहा कि ये नॉर्मल ट्रेड टर्म्स लेकिन इसको फर्दर कोई डिफाइन नहीं किया तो इस पे भी कुछ क्वेश्चन वो रिलेट कर सकते हैं
नॉर्मल ट्री टर्म्स कहाँ पे है?
ये अभी सर इसके अंदर है ये जो अ,
आखिरी पैरा है?
जी ये असल में मेरे पास जो नोट्स हैं ये on normal trade credit terms
हाँ, ये है
deliveries
ना.
effectively constitute sale made on normal trade credit terms
हाँ, नॉर्मल क्रेडिट टर्म्स मतलब 30 डेज क्रेडिट होगा, 60 जो भी नॉर्मल इंडस्ट्री में चल रहा है उसकी
ये
बात हो रही
मैं
है.
कह रहा हूँ कि इससे भी मतलब वो रिलेटेड इस तरह का भी पूछ सकते हैं जिसमें आप कह रहे थे
मसलन
कि भाई जो भी टॉपिक होगा
नहीं, क्रेडिट
उसके
टर्म्स
राउंड
का
अबाउट
देखें, क्रेडिट टर्म्स को क्या पूछेंगे, बढ़ा दिया हो भी सकता है, लेकिन क्या क्वेश्चन होगा ना, अभी मेरे ज़हन में इस तरह से नहीं आ रहा. क्या क्रेडिट टर्म्स क्या होती हैं? कि आपको 30 डेज का क्रेडिट दिया, 60 डेज का, इसमें से कोई ऐसा सच कोई बहुत ज्यादा कोई कॉम्प्लिकेटेड क्वेश्चन निकलने की उम्मीद नहीं है. कि आपकी
ठीक
क्रेडिट टर्म्स जो हैं वो अगर चेंज हो जाती हैं, क्या होगा? आपकी 30 डेज होगी, वो कहेगा कैश पे ले नहीं है, अब आपने फर्ज करें क्रेडिट खत्म कर दिया है, या वो कहेंगे 30 डेज का तो 60 डेज का क्रेडिट दे दो, यही होगा ना. ये इसमें और क्या अपेरेंटली तो यही नजर आ रहा है। क्रेडिट टर्म्स तो यही, क्रेडिट टर्म्स तो इज अ कॉमन टर्मिनोलॉजी जो हमें पता है कि क्रेडिट का क्या मतलब होता है, और सेलिंग क्रेडिट पे हो रही होती है। तो आपका ये आपके पेबल बन जाता है ना, आपकी एक तरफ इन्वेंट्री आ जाती है और दूसरी तरफ पेबल हो जाता है। ठीक है, तो ये तो इस तरह से है। बहरहाल उस पे क्वेश्चन, उस पे आई डोंट नो क्या आ सकता है, हो भी सकता है, लेकिन अपेरेंटली कोई ऐसा नजर नहीं आ रहा। Balance scorecard looks the most appropriate performance evaluation technique for dealership. Um, though a balance scorecard is like, because you know that your performance is being evaluated on the numerous criterion. So you know that the balance scorecard takes into account financial, customer service, customer satisfaction, internal process, learning and growth. If you remember that, you know that, so that's the more appropriate criteria for your dealership, because that will be helping you to focus on all the areas, just not increasing the sales. That will ensure that the customer satisfaction is also important, because we have been told here. So you need to have an idea about the balance scorecard. We have read that, like, what is the balanced scorecard. I explained you even from the name that what this balance scorecard is all about. So the dealerships are even certain given certain exclusivity in specific region, but the same manufacturer dealership compete with each other. You do have the two dealership. One is located in a one locality, the other one on another. They would be competing virtually for with each other. Reason being, the customer of this region area can go to that dealership, right? But ultimately, goal congruence that at the level of the cup car, you need to generate the profit. The manufacturer is controlling quantity and model, leaving limited control of dealership on selecting the popular model for specific region. Now, I was talking about the consignment inventory. It's just like a treatment. Sale is recorded at date of delivery, right? Manufacturer de-recognize the inventory and record the sale. So I explained that to you, the entries for both the seller and the buyer. And then dealer record purchase and include goods in inventory. Whereas sale is not recorded at date of delivery, manufacturer continue to include goods in inventory, and the dealer makes no entries in their books. This is the consignment inventory understanding. Like, they would be treating it accordingly. Like, now currently, the treatment is being this treatment is being followed. So instead of selling car, manufacturers may place it with the dealership for sale. So that would be the, and then there would be the impact on it, on your dealership, of having the change in the relationship, and explained you that what could be the impact, right? Then balance scorecard, I told you that that's the more appropriate way of uh, evaluating the performance. A balance scorecard takes into account the wider range of the performance indicators, and those include the financial perspective, customer perspective, innovation and growth perspective, internal business processes, so that those all things would be, you could explain some of those, the points from under each of the heading. It's not expected that you would be explaining each and everything. So you need to give generally an idea about that, what the customer perspective could be. Lead time, like now the delivery time is important. They are placing an order, that after how long time they are getting the order. Increase the satisfaction of customer, increase the loyalty of customer, sale revenue. Now this is per customer. These are the some of the indicators which customer satisfaction, right? Workshop layout is range of car available. That would be that would be covering the innovation and growth, employee productivity, revenue per employee, etc., right? The selling price of a new car may be based on the car manufacturer's recommended retail price for each model, although this is indicative rather than mandatory. Now, this is the point. It is not mandatory. You could take the liberty to sell it at the price that you want, right? And dealerships are free to adjust the price if they wish. There is an element of profit for a dealership built into manufacturer retail price, recommended retail price. although that can be as little as 2 to 3% of the price invoiced to dealership or for economy brand, increased to 10% luxury brand. So now for the economy brand 2%, for the luxury brand 10%. For instance, like for the general Honda, Toyota cars or other cars, Suzuki cars, it's 2%, and for let's suppose that the luxury car, uh, uh, Ferrari, Lamborghini, or some other car, like that's like 10%. The margin, and this is also not confirmed. This they have just told us that can be, right? Can be means that it's not confirmed. It can be different. Okay, the margins charged on the sale of the new cars are insufficient to cover dealership overheads. Fortunately, the sale of the each new car create further opportunity. Now, this is another fact. You need to understand that the commission that your dealership earn from the sale of the new and the used car is not enough to cover the overheads. So, if you, this is important that you know generate commission from the other avenues. So the other avenues are generating the revenue, or car manufacturer pay bonus that reflect the ability to meet. Like there is if there is a target, like if you a leadership would be selling 100 cars, they will be getting a bonus of 100,000. Let's suppose. So you know that they are targeting it to do the bonus, not those 2% commission amount. Sales targets in terms of the number of new cars sold. Those bonuses can significantly augment the profit from the sale of new cars, uh, provided the targets can be met. This is very common in airline industry. These travel agents, airlines allow them to charge a certain commission fee, which is generally 7% or 5%. So what they do is that while they are selling the ticket, they give the discount to the customer. Like they would be taking 2%, or even they would not be taking anything. They would just be selling the ticket on the price, which has been recommended by the airline. They're not taking any commission. Now, airlines give the incentive to them that if you would be generating a sales volume of, let's suppose, 5 million in a month, you will get a incentive of 3%, 4%. Now, there is a trade-off. If they would be charging the whole commission, they would be generating the low sales. So even the commission amount that would not be sufficient for them to meet their expenses or to generate the profit. So what they do is that they target that incentive slot. So if you generate 5 million, you will get 3%. If you generate 10 million, you will get 6%. So you know that they target that slabs, which enable them to get the incentive. So the most customer trade in their old cars, and the dealership can usually resell those at a profit. So you know that you bought a used car at a exchange price of $25,000, or let's suppose $10,000, and now you are selling it at a $13,000. They There may be commission on the sale of extended warranty and other products. We're gonna see it. Although we have discussed it, my idea was to giving you a familiarization and preparing that fact sheet and giving you the summary was that when we would be doing the this pre-scene analysis, it would be actually the reinforcement. It is not like that you are reading it first time. So hopefully customer will bring their car back to the dealership for servicing and the repair. So you would be generating revenues from there as well. So current business model leaves almost no space for dealership to compete on the basis of price. There is a little margin on the price. Even all the dealerships would be knowing that they cannot charge high price. So what they do is that they are competing on the basis of the service levels. How good service you are giving to your customer, how good relationship you do have with your customer. Commission from the sale of a new cars is a not significant source of revenue for dealerships. Instead, it generates revenue from incentive, profit slash profit on used car commission on sale of warranties and charges for the services. Demand for the other services is derived from the sale of new and used car. Like even the used car demand for the used car is coming in such a manner that you are selling a new car and getting in exchange a used car. You could buy outrightly a used car from a customer if they want to sell. If you think that you could sell it at a good price later on, you could do that. But generally, they encourage the customers to do it like in exchange. Reason being that they are buying the car, they are generating some profit on the used car. When they sell the new car, although they have not made any profit, like or have they have not generated any commission income, but that car would be coming to your service center for the service, for the maintenance, then you would be making the revenue from it. So demand for the other services is derived from the sale of the new and used car. And pricing strategy. Now, this is the business model of your company. You need to understand it, right? How you are defining value, how you are creating. Now, all the things revolve around it. Pricing strategies of the dealership are determined by the competition. You can't determine the price. Price is dictated by the manufacturer and controlled by the market. Okay. Then, sorry, I will have to do that. ये भी ज़्यादा ही हो गया. Okay. This pricing strategy, what do you think that the pricing strategy, which pricing strategy would be most suitable competition based? This is the most suitable pricing strategy for you, discount, premium, going rate, whatever the, that you would be charging. A premium you could charge for your used cars. Why? Because you could say that our used cars are of better quality, those are reliable, those have been inspected, and you could create a, the whole narrative. But for the new car, you don't have any margin. The new car is new car, no matter you buy it from one dealership or the other. So you can't say that my new car is better than the new car from another dealership. No, you can't do that. But you can give them incentive. You can give them, lure them by offering them some accessories of the car. But that's not something, that's not, that would not be generating revenue for you. That would actually be reducing your revenues. So competition based. Loss leader, it was just coming to my mind that you could do the strategy. You are actually doing that strategy of the loss leader in a way, or in the given information you are not doing the loss leader kind of a strategy. I would say you could do it, but by that we have been told that on average the profit on a new car is 2000 something, I think 2100 something, but whereas on the used car is more than the a new car. So loss leader is that you are selling your initial product at a discount but generating the revenue from the derived demand, like these razor. Razor, if you buy a razor with the whole, like the whole package, like the stick and the heads, that's not expensive. The stick is almost free. But when you go to buy those heads, the razor heads, that is so expensive. And in the recent past, by the way, the prices have become double, almost the double. So what they do is that they are, and similarly, these uh, glucometers is another example. I'm giving you this example because I've experienced my mother. She was having like this uh, diabetes, so we bought that glucometer. So there are a lot of glucometers in the market, but I was surprised to know that each of the glucometer, that strip is specific for that glucometer. It is not that there are the general strips and everybody can, you could buy the strip and put it in any glucometer. No, there is a specific strip. So if you buy a specific glucometer, you will have to buy their strips only. That is also loss leader. The glucometer price was very cheap, but then every time you are buying their strips, loss leader. So this could be the strategy in your case as well, that you would be that selling it at a even at a discount, and then you would be generating the revenue. These airlines do use this strategy. These Ryanair and some of the other low cost carriers, they do that. They would be giving you the basic fare is very low, but when you would be adding the other services, like you are getting the leg space seat, you are asking for the meal, you are asking for the baggage, so they would be charging you for that. That's the loss leader strategy. We learned about that in the pricing strategy. I believe that you remember it. Yeah, price bundling is that you could bundle the some of the products. Like you could say that you buy a new car at you may not give the discount, and you could say that that we will be giving you this service, or you could say that you could get a 6 months extended warranty, or you could give some other accessories for price bundling. Your company can do that. That is also to increase the demand, stimulate the demand. Generally, the organizations do that when there is a intense competition, because you want to pull the customers, and you know that you want to get the customers, so you could do that. This is again one of the strategies. New car sales, the average selling price, let me make it a little bigger. So the average selling price of a new car in Welland is 20,000. The average gross profit per unit is, this is the information I was talking about, 2,400, including sale incentive paid by the car manufacturer after the period end. Like this includes the bonus as well. So we don't know that how much is coming from the bonus. Maybe all of this, most of it is coming from the bonus, because we have been told that the inbuilt commission is just a 2 to 3% of the car price. So the new cars vary in price from Wellandian dollar 14,000 to 40,000 for popular models, although there are much more expensive. Now you need to understand that here your capital, which is being invested, working capital, to generate a 2,400 profit is somewhere like 14 to 40,000. So on average, you could say that $20,000 working capital is generating a profit of $2,400. And the whole time, which we have not been told that what is the whole time. Whole time means that you got a car, on average, your car is being sold after 30 days. It is received by your dealership. It is not like that you got the car in your showroom and that would be sold immediately. There is always the time, whole time in such a business. So that cost you, because your capital is stuck there. So one of the objective in any business is to keep the working capital low, because that would then require the less financing requirement. Welland has a 5,200 franchised new car dealerships. These dealerships employ a total of 620,000 people. So your this dealership fraternity is creating a lot of employment in Welland. So there are 30 popular brands of new car. It's an intense competition on sale in Welland, each of which has a network of dealership across the country. The 5 largest brands in terms of dealerships are Barto Motors, Mencars Auto, Copower, Road, Road, Rotaries, whatever, the names are not important. So commission on the car sale is determined by the price of the car, but volume is determined by popularity of model, right? So that's quite obvious. I believe I don't need to explain it to you. Dealerships are human intensive business, so employing a significant number of employees. On average, if you see, so if we calculate on average that how much of the employees are on average working at a dealership, you would see that there are almost 120 employees working in at on average at a one dealership. On some of the large dealerships, there might be the more employees working, but on average 120 employees working at each dealership. So that's quite a good number. So all the 5 popular manufacturers are maintaining almost similar number of dealerships. You could see that there is a small difference, 410, 394, and there's a difference, but not so significant. So there is a tough competition. Actually, this tells us that there is a intense competition among the car manufacturers and the dealerships, consequently. Fleet leasing, some large car dealers offer a fleet leasing service to the corporate customer. The customers specify the models and the numbers of the car that they require. The dealer then has its dealership supply those cars, servicing and repair them as necessary for the duration of the lease. So lease is like a whole package, which includes the car and the maintenance and the service support. Dealerships can count cars supplied as a fleet as a car sale, which help them to meet car manufacturer sales target. The leased car are usually supplied under an operating lease arrangement. At the conclusion of the lease, the cars are returned to the lessor and are usually sold through the company's dealerships as used car. Your fleet leasing department would be selling it, will be giving it on operating lease to the corporate customer. We have been told that more than five car, if a corporate customer is placing an order for more than five car, that is considered as a fleet leasing, and they are providing the whole, the package. That is also a kind of a good business for you. Now you have provided the car to the corporate customers, but the capital business is that you are getting the maintenance business, service business is also from your dealership now. So the two types of the customer, individual and corporate, the requirements of both of the customers are different. Therefore, different sales techniques are required to capture these markets. Corporate customers, their priority is completely different. They are not price sensitive, whereas the individual customer is price sensitive. The corporate customers are quality conscious. They want their cars to be, spick and span. Everything should be okay, it should be operating well, and such type of the things. Cars are given to corporates under operating lease. So you could have a quick look of the operating and the finance lease. There could be a question on it because now you know that you might be giving the cars on operating lease, but you know that we will see that there is a condition which makes it obvious that the lease is an operating lease or a finance lease. Those conditions are if the ownership with the lessor, in this case, yes, the ownership with the lessor. Lessor is Cuppcar. Lessee is the corporate customer. Transfer option at the end of the lease period is there with the lessee. If this is the option, then it is a finance lease, right? Risk and reward related to the asset with the lessor, because they are responsible for the maintenance and all that. They are providing the warranties, right? They are being paid for it. Uh, doesn't have any option, purchase option. It doesn't have any purchase option, or the lessee has the purchase option. That would be defining. We have not been told about these things. We have been just been given a very brief information. So in the question, they could give this information, and then they could ask you that you need to give your analysis or the commentary that how we should treat it. Expenses borne by lessor. Here, the expenses are borne by the lessee. Running cost to lessee, no running cost or administration cost. You are not. This is being paid by the uh, what we call that, the operator, corporate customer. They are paying it. No depreciation can be claimed. That is said had not been told. We need to see that. So we have been told that it's an operating lease, and this is because of these, 4 or 5 conditions. Running cost, administration cost is the responsibility of the corporate customer. So if we see that the current relationship is more like an operating lease, but you know that what you will do is that you would be that if it is going beyond a 1 year, then they would have to book it as an asset for that time period to the corporate customer, and the payments that they need to make would be recognized as a liability. So we would not be going into that detail. Generally, it is good enough. So the same thing has been explained here a little bit in a more detail. You could have a look at it. Again, it help us to decide that what type of the lease that is. Current lease is operating lease, but if they change any structure, then we could see that how we're going to handle it. Okay, that was all about the new cars and the used cars. Now, the used cars have previously been owned and driven by one or the more previous owners. Some car dealerships sell only used car, but a new car dealership also sell used car as an additional source of revenue. So the one thing is one information that you need to understand from here. New car dealerships can sell the used car. They can have their in their showroom the used car of any model, but the new car of the only of the one model which they are representing. Then there are the dealership of the used car, and they those dealerships are not franchised dealerships of manufacturers, so they have the liberty to have the used cars of any dealer, any car manufacturer, right? So car dealerships accept the customer existing car is in a part payment for new or used car. Customers then pay the difference between the price of the car that they are purchasing and the value of the car that they are trading in. The value of part exchange car is a matter of a negotiation between customer and dealership sales executive. The value of a used car is determined by several factors, including the popularity of the model. That's very common. You could understand here most of the people here in country, they when they buy the car, they don't look at the luxury, they don't look at the other. Their the prime consideration is the resale value. So as if they are just buying it to resale for the resale. So it's age, wear and tear by the and the distance. You know that if you go there on the those websites, you will see that they will tell you that how much mileage a car has done, and the car's mechanical condition and the condition of its bodywork. The average selling price of a used car in Welland is $16,000, 20,000 new, 16,000 used car. For used car that are up to 4 years old. So it is almost like a new car, less driven, less, the although there is a significant variation between the prices of the older economy models in poor conditions and the better quality cars that have only one previous owner. That's also important. When you go there to buy the used car, you would ask them, that uh, are you the first owner? That's also because the different people would be driving a car, they would be driving it in a different manner, so that would be having a detrimental effect on the engine health. So determining the price of the used car require expert evaluation of the car and depends on the negotiation skill of the sales executive. Now, you would be having a team in the workshop. They would be evaluating the car and they would be determining that what would be the suitable price for it. Like they would be telling you about the car condition. Here, inspection report, that they one of the park wheels, they give the inspection report of the car. They have a certain criteria and they measure the all those the things, they check it and then they give the score out of 10, like 9, 9.9 or 8, whatever, depending on the condition of the car. I would appreciate if you keep your mics mute. Okay. Purchasing used car or acquiring it in a part exchange increases the inventory of used car. That's a question. Like you need to understand that you are paying for it and your working capital is being stuck there. So you need to see that how quickly you can sell those cars. So nature of the business of the dealership requires them to hold large amount of inventory. That's what I'm telling you, the working capital. So the value of the used car is determined by the, okay, we have studied about, we read about it. Okay. Trade purchase are made from other dealerships. So one source is that getting a used car from a customer. The other is from another dealership, right? You are selling Barto cars, so you know that you might display the used car of the Barto. You could get it from a customer, or you could get it from another dealership. That is called the trade purchase. Trade in and trade purchase. Part exchange, part payment, that's like trade in and then trade purchase. Who wish to dispose of the cars that are not suited to their customer. For example, a new car dealership might have taken a poor quality trade-in that would look out of place on the dealership car lot. A used car dealership might buy such car at wholesale prices. Similarly, a new car dealership might be keen to buy good quality used car from used car dealerships that do not usually trade in expensive models, right? So it's both way. The dealerships even do the transaction among themselves as well. Now, this could give a rise to the transfer pricing concept. Your used car dealership is selling the car to your new car dealership, or a new car dealership giving a used car to your used car dealership. This is internal within the company, Cuppcar. So transfer pricing concept. You need to have a very clear understanding, and I could see that in one of the variants, you're going to see a question on the transfer pricing. There's a clear indication that there would be a. So you need to have a very good idea what the transfer pricing is. They will give you a situation and then they will ask you for a commentary. So you will be explaining that what is the transfer pricing, how the price is fixed. You would see that the those conditions like the intermediary market of the product, etc., the surplus capacity of the selling unit, and such type of the things would be leading us to determine that what would be the most appropriate transfer pricing to carry out a transaction between the two two units of or the two dealerships of the cup car. This is important. I'm explaining you again. Transfer pricing, I have explained you. You should read that concept with the focus it to its application. We will see that if we find a question, I could show you the question as well. Okay, the retail purchases are made from the car owners who wish to sell in. There was a trade in, then the trade purchase, now the retail purchase. Sell their cars perhaps because of financial difficulties. New car dealerships will often purchase good quality used cars, especially if they are from the same brand as the new cars that they sell. New car dealerships evaluate used cars that they acquire as trade ins and decide whether to sell them as a used car from their car lots. Cars that do not meet dealerships standards are usually sold to a wholesale price to a used car dealership. Now you could sell it to the used car dealership of your Cuppcar's used car dealership, or to another third party used car dealership. The profit on the used car sale varies, but it can exceed the profit of a new cars of the same model because each car is unique, and so dealers are free to charge as much as customers are prepared to pay. The average gross profit from the sale of a used car that is up to 4-year-old is 2600. There it was 2400, here it is 2600. So acquiring the used car through any means poses a considerable risk of resale, both in terms of price and holding time. You bought it at a certain price, you don't know that whether you would be able to sell it, although you would be using your expert opinion and the judgment, but still there is a risk associated with it. And then for how long you might have to hold that car, that would be another point that needs to be considered. However, the investment required to acquire a used car is less than new car, whereas the average profit per used car is more than the new car. This is just like reinforcing that the information is given here. Now they have given the details that how much of the new car dealership source of used car, what are the sources of the acquiring the used car. They have told us that the trade in on new, that is the most like when you are selling a new car, and in part exchange you are getting the used car. Then the trade in on used vehicle, people bringing their used car to buy another used car. So this is a better thing, like at least you are doing some sale. You are taking the used car, but you are generating revenue. This is like directly purchasing. This retail purchase from customers, trade purchase from the other dealerships. So retail purchase is the smallest part of the total purchases of used car, because just buying a car from a customer, paying the cash, you don't know when you would be able to sell it. There is no attraction for you being a dealership in it, except that you might be generating some profit on when you would be selling it. But here you got the attraction because your car is being sold. you are making some profit on it, or that car would be coming to your dealership. Here again, you are selling another some car. So trade in on new and used car is better as it helps to increase sales of used and new cars. So car dealerships often purchase used cars from the other dealerships or from individual. These are chosen on basis of their suitability for the dealership market, and so can usually be sold at a profit. Now, okay, let's take a break.